Good afternoon, everyone, and welcome to today's webinar on understanding carbon border adjustment mechanism and its impact on the GCC. My name is Neha, and I'm the marketing manager at Olive Gaea. It's a privilege to have you join us as we explore the critical topic of EU CBAM and its implication for the GCC exporters. This session will provide valuable insights into navigating these regulations and identifying opportunities for sustainable growth. Now, before we begin, some housekeeping notes to ensure that we are having a seamless experience. Please use the Q&A feature to share your questions, and we will address them during the dedicated Q&A session towards the end. You will receive an email with the slides after the session, so please do not worry about note-taking. If you have any technical issues or immediate concern, please feel free to use the chat function, and our team will assist you promptly. Now, a brief introduction about Olive Gaea. We are a leading climate tech company committed to closing the climate action gap and enabling businesses to achieve sustainability leadership. Beyond bespoke consulting services spanning from ESG and net zero strategies to carbon offsetting and life cycle analysis, Olive Gaea provides cutting-edge technology solutions to enable real and science-based sustainability action. Olive Gaea's AI-driven SaaS platform Zero meets the growing requirement for carbon accounting and sustainability by fast-tracking decarbonization as well as ESG risk management and reporting. Since our inception in 2022, we have successfully collaborated with some of the largest government and private entities in the region. Our efforts and innovation have been recognized by esteemed organizations like Google, BCG, Deloitte, and many more. Now, a brief introduction about our team. Vivek Tripathi is the CEO and the co-founder of the company who brings nearly 2 decades of experience in leadership roles at renowned companies like Reliance and Baker Hughes. Jessica is our co-founder and CMO of the company, and she has more than 15 years of experience in PR, communication, and sustainability, coupled with a robust background in international affairs and public policy. Kapil is our CTO who leads the product development with over 20 years of experience in the tech sector. Oksana is the head of growth and is a sustainability leader with expertise in ESG transaction and net zero strategies. Raghu is our carbon emission expert who brings extensive knowledge in ESG and net zero emission. Abhishek is our regional growth leader and he specializes in sustainable finance and public policy. Saranya is our GHG analyst who has more than 5 years experience in the sustainability sector. Now, a little introduction about our speakers of today. Vivek Tripathi. Vivek's career is marked by impactful leadership and strategic acumen. As Chief of Staff at Reliance Industries, he provided direct counsel to the board, while at Cadence, he spearheaded international acquisition and LNG ventures as Chief of Strategy. At Baker Hughes, he has led more than $500 million transformation project for global clients like ADNOC and Saudi Aramco. Driven by commitment to sustainability, Vivek leverages his extensive experience to champion science-based climate action and make sustainable practice a standard in the business community. Our co-speaker for today is Pietro Valaguzza. He is the CEO of Kickster Group. He has extensive experience in climate and sustainable policies, sustainable finance, disclosure framework like GRE, TCFD, etc., with specialization on ESG risk evaluation, sustainability-linked financial product, and climate risk assessment and carbon market mechanism. With over 15 years of experience, Pietro has worked on CBAM projects for EU and non-EU companies and has contributed significantly to international framework like GHG accounting, MRV, and ETS. He has also served as an ambassador of the European Climate Pact for 2 years, and now he's a member of several global sustainability councils. Our speaker's expertise will provide us with a comprehensive understanding of sustainable practices and strategies for navigating CBAM. Now, I'll just go through the agenda for today's. We will begin by exploring the objective, sectors affected, and the timeline for CBAM's implementation in the first 5 minutes. Next, we will discuss the essentials of embedded emission, the role of CBAM certificate, and the process of calculating emission across product categories. Following that, we will delve into the strategies and the best practices, including emission data tracking, supply chain management, and compliance steps tailored for GCC. Finally, we will conclude with a 15-minute Q&A session to address all your queries. Now, without further ado, let me hand it over to Pietro to guide us through the fascinating world of CBAM. Pietro, over to you.
Hello, everyone. Thank you, Neha. Fascinating word is the CBAM word, actually. But first of all, we need to understand a little bit what is the European CBAM about, how it works, and especially why an European policies is affecting so much exporter company like the GCC countries company exporting to Europe. So basically, the carbon border adjustment mechanism is an environmental policy that is designed to support the European climate ambitions, achieving the net zero goal that we set for the 2050. And we have an intermediate target of 55% by 2030. And actually, in the package of what we call the 54-55 package, the CBAM was one of the other many other policies included in this package presented last year and approved in 2023. The CBAM wants to complement, in a certain sense, wants to mirror the European emission trading scheme, which is probably the biggest emission trading scheme on force now around the world, because it was created during the Kyoto Protocol area, covering high emitting sectors and trying to define the pathway to reduce greenhouse gas emissions associated with this sector. In the mirroring effect that I was mentioning before, the CBAM wants to address the same problem also for goods produced outside of the European Union, preventing, of course, carbon leakage and therefore reducing global carbon emissions. The general context, let's say, it's related to the Paris Agreement's goal, so the European NDC, and in Europe, it's also related to the effort sharing regulation, which is a regulation which addressed the greenhouse gases emission, considering different levels of efforts in different economic sectors. In the graph, in the image on the right, you can easily understand how the carbon border adjustment mechanism works. If there is a non-EU supplier bringing goods, exporting goods to Europe, something is happening at the border, something is happening at the custom, and even if the obligation is, of course, for the European importers need the cooperation of the exporter. First of all, and we will see what they need now, as of now, in the transitional period of the CBAM, and in the future, starting from 2026. Being an environmental policies, the general Paris Agreement and how also non-EU countries are reacting and are setting their goals about eventually carbon neutrality or about national local markets, it's very important because, of course, there are connections and policies are interconnected also among countries. For Europe, the goal set is to be carbon neutral, carbon zero in the next 25 years, but we also want to prevent the leakage of emission, meaning that we don't want our European producer to go outside of the European Union to produce without having any limits or burden for their CO2 emissions. And on the same side, we want that third countries or non-EU countries tackle the climate change in a very similar way that we are doing. As we will see, also related to CBAM, the carbon tax paid in a third country, it's something which is very relevant in the regulation. And that's why, in a certain sense, also from a governmental point of view, when you talk about CBAM, we are looking at some reactions from other countries around the world. The 54-55 package is crucial to understand how it works, and it will be crucial also to understand how the CBAM will deploy in the very next years, because in this pathway that we set to achieve the carbon neutrality, the European Union, the European Commission already said that we are going to go to increase the goods covered by the CBAM regulation corresponding on an increased obligation from European companies. And as you can see also here, the Fit for 55 package It's a very strong package, increasing the ambition of the European Union to reach the carbon neutrality. Getting back to CBAM, we have two main documents setting out the rules of the CBAM regulation. We have the CBAM regulation that was published in May 2023 in the official journal of the EU, which define exactly the rules about the CBAM, and it creates the CBAM regulation, it creates the very first phase of the CBAM regulation and the general overview on how this mechanism would work in the future. Lately, in August 2023, it was published the implementing regulation for the transitional phase, because in the main regulation, we created two phases. The first one, 27 months, applying from October 2023 to the last day of December 2025, and the definitive period starting from 2026. So for sure, we know the general rules, and we will deep dive in the general rules of the CBAM regulation, considering different impacts of the regulation also for exporting companies, especially in the third part of this presentation, where we'll give you some insight about what the importers are doing, what the exporters are doing, and how to align, of course, to best practices. And on the other side, we have the CBAM implementing regulation for the very first 27 months, which set the rule exactly of what we have to do now. After me, Vivek will talk about the embedded emission, which is something very, very relevant for the CBAM, because we understood that CBAM is a climate policy. We understood that the overall goal is to reduce the risk of carbon leakage, and the instrument was designed to make sure that the price of carbon of imports is equivalent to the carbon price of the European production. Of course, there are some slightly differences, because as the European Union, the European Commission can only regulate European companies. And that's why if we look at the emission trading scheme, we see sectors involved. For the CBAM regulation, we needed to find a way to align the needs of tackling the CO2 of this sector, and that's why in the CBAM regulation, what is relevant, it's not the sector, but it's the good, which is coherent, of course, with the sector, but in the CBAM regulation, we find exactly the list of goods that are included in the regulation. What's the main difference between the transitional phase until December 2025 and the definitive phase starting from the 1st of January 2026. In the transitional phase, there is no financial adjustment for importers. So as of today, we will see that the biggest concern for importers is to collect data about the embedded emissions. This is something which is not very easy to be done, because in the CBAM regulation, some rules were defined. There is a clear idea of what are the scope included, depending on the good, which are the burden, and Vivek will talk about this in a very detailed way in the very next slides. But the embedded emission is already the topic for CBAM, and in the future, the level of embedded emission will be linked to a financial adjustment that the importer should pay. The importer should buy CBAM certificate starting from 2026 to cover the embedded emissions of the good imported. In the transitional period, the importer has something to do, yes, and they are presenting quarterly report with the data of the goods and embedded emission of the goods they are importing. And eventually, they also have to consider the carbon price paid in the country of origin. Think about a general concept that we have inside the European Union policies, climate policies, of course, is the idea that who pollutes pay. So if there is any kind of pollution, in this case, some GHG emissions, we have to put a price to these GHG emissions. And this is exactly what CBAM is going to do. in the next years. The sectors of the ETS are the cement, electricity, iron and steel, aluminium, and other sectors. We also have paper, we also have other energy-intensive industries. The goods included in the CBAM regulation are belonging to these sectors. There is some kind of rules for goods of the same sectors, but once again, we just need to look at the CN codes of the goods we are exporting to the European Commission. So in the very first CBAM regulation, in the annex, it was shown all the list of the goods, and for every CN code included in the regulation, there is a clear explanation of how to calculate embedded emission and what is the reporting needed from the exporter's point of view. This is an example of the CN codes, and there is also some consideration about some kind of differences in the scope. So it means that, for instance, in the cement, we are just looking at the embedded GHG emissions, so the carbon dioxide. For aluminium, we consider also other GHG gases. So the regulation, as I said before, it's very, very specific, and it's very specific how all the calculation and all the process is related to all the goods included in the regulation. The indirect obligation that we have for exporters during the transitional phase is to give data about the embedded emissions. Probably lots of you are already engaging with European importers who are in need of the requested data. I think the image is very, very clear. The main obligation and also the compliance needed is for the importer, which also the declarant, which needs to report on the embedded emission to the European Commission. We will see that there is a CBAM transitional registry. The information will be exchanged with the national competent authorities and member state authorities. There is something to be done with the custom authorities because, as if you keep in mind the very first image, all the CBAM is happening, let's say, at the borders. And if there is something, if we are importing something from non-EU countries, you can see in the image that the main topic is the embedded emissions. So for sure, you should get ready to give this type of information to your importer. But keep in mind that it's not just a nice exercise, but now all the European importers will assess on different exporters, considering price and quality, of course, but also the level of embedded emissions, because it will create the cost of the CBAM for them, and also the carbon price paid in the country of origin. So you have to get ready to account on your GHG emissions, considering the CBAM boundaries. You have eventually to understand your decarbonization pathway, because the level of embedded emissions will be relevant for you in the market, because it's something that it will be evaluated at least from the European point of view. And of course, you will notice probably, and also in GCC countries, this is happening already, that some national policies on carbons and carbon taxes, some like emission trading scheme, will be created in order to reduce the impact of the CBAM. The European CBAM is the very first one implemented recently, but UK is thinking on the same CBAM, a very similar mechanism. Canada is doing the same. So basically, everywhere in the world where you have a price for carbon emissions, a CBAM mechanism will be created. And if I was good enough to make you understand why there is a connection between the national markets and the, let's say, third countries markets, you really understand that what is happening now in Europe is going to happen also in other countries. And so the activity that you have to do now to monitor GHG emissions, to understand the level of embedded emission, and eventually to decarbonize your production is something that will be very, very important. Here we wanted to add some data about the export of the GCC countries to Europe. We can see that it's a lot of money. So the export and the trade relationship, it's a very strong one. This is for all commodities, and the year is 2022. That was the last available data. And here an example of the iron and steel. And yet there are a lot of economical interest that you can understand in this image. So the impact of CBAM is something very, very important. We wanted to give you also some highlights on how in different countries in the Gulf Arab states, they are reacting, creating carbon markets. So GCC countries actually are establishing or have established already some carbon market related initiatives with a different kind of approach. Not all the ETS in the world are the same. So also, even if there is a carbon price paid in the country of the origin of the good, the potential discount at the European level is still not clear how it will be calculated, because it's very important to understand which are the boundaries of the national ETS, if it's a voluntary scheme, if it's a mandatory scheme, which are the GHG emissions included, which are the sector included, if there is eventually also, let's say, a free allocation of allowances inside the market. So we will go inside the most relevant initiatives. Some of the initiatives are related to voluntary carbon credit scheme and voluntary carbon credit exchange platforms that make sense in order to allow company to be able, with removal credits, let's say, to reach the carbon neutrality. Maybe some of you was also listening to the talks during the COP29 in Baku that's recently ended, and how carbon markets were the main topic of the COP29, and especially the development of Article 6, which is about carbon markets and interconnected carbon markets in the world. What we know about the regulation of CBAM and carbon markets is that it should be a mandatory scheme and not a voluntary scheme. So as of today, the European Commission decided that the eventual discount in quantity of CBAM certificates to be bought by the importer should be related to a mandatory scheme and not to any voluntary scheme. So there are several initiatives, as I said, that are giving really advantages for the GCC countries, but still carbon market in GCC countries are nascent. So it's not easy to implement in ETS. If you read this slide, there are some structural challenges, including emission data availability and disclosure. But again, the emission data availability is exactly the same topic that Vivek will deep dive, and it's the topic about the CBAM. And then, of course, there is a general consideration about the policies. So a carbon market, a carbon tax is a mitigation policies. It can address some kind of GHG emissions eventually, for sure CO2, but it doesn't take in consideration other sustainability elements, other parts of the environment. And so, for instance, it's not related to biodiversity and other kind of restorative and adaptation measures that still are to be implemented everywhere in the world. So we see that in Bahrain and through the NDC, so the national document that was presented in the context of the Paris Agreement, there are several initiatives, and in 2023, there was the first launch of a voluntary carbon offset platform, targeting hard-to-abate sectors, but still a voluntary carbon scheme. So this will not create the discount in the cost, let's say, of the CBAM for the importer. In Kuwait, there is not an emission trading scheme as of today, but yes, it's doing something considering the provision of Article 6 that I was mentioning before related to the COP29 talks. And already Kuwait with Rwanda and Singapore signed an agreement on some international transfer mitigation outcomes under Article 6.2. We are not here to talk about Article 6, 6.2 and 6.4, but I wanted to highlight how everything is connected to the main goal of the Paris Agreement, and the assumption of the CBAM is exactly the European position inside the Paris Agreement. Again, Oman is aligning with Article 6, is updating the National Determined Contribution document, and is drafting let's say, national carbon market with, let's say, a mixed approach. It's not exactly a copy of the European one. And of course, there are many aspects related to afforestation, restoration of natural environments, and so on. Qatar has done something a little bit different, taking the leadership also on the carbon markets for the Global South. Let's say there is the Global Carbon Council, which is the very first, let's say, Arab standard for voluntary carbon market scheme, and it's aligning to the requirement of CORSIA, so related to the aviation necessities in reduction, in emission reduction, but still with a different scope if we take into consideration the main scope of the CBAM. In Saudi, they are investing in carbon markets. Of course, there is a voluntary carbon market scheme platform that auctioned a tons of credits in the last year with big national buyers, but they are trying to understand how they can design a national, a domestic carbon market, taking into consideration also eventually the impact of the CBAM. Finally, the United Arab Emirates are engaging in voluntary cooperative approaches under Article 6. So something is happening, and you're not alone. You can see the worldwide map of the ETS. We have, as of today, 36 ETS in force in the world. So ETS with rules about accounting, about who is obliged, about a compliance mechanism. We have 14 under development, and we have 8 under consideration. Probably if we meet again in 6 months, this map will be totally different because, as I said, everyone under at least the Article 6 of the Paris Agreement is trying to define his own national and domestic policies to reduce the GHG emission. Going back now on the CBAM regulation, as you understood, the CBAM regulation and all the compliance is on the importer, because it's the importer which is the reporting declarant, is the importer who is making the custom declaration. He is the importer who has to now put the data inside the IT system that was created to make the mechanism work. And this IT system is the CBAM registry. As of today, and you can see here the image taken from the European Commission website, the CBAM transitional registry is just for importers. In the future, and so starting from 2026, when the definite period will be live, also non-EU producer, and so also exporters could enroll in the CBAM transitional registry. And so all the process of exchanging data, exchanging information with eventually different importers will be easier for everyone. Now, this is an option just for the importer. So you as exporters now don't have to do anything besides providing the information to your importers. The compliance, again, that will be related to some CBAM certificates that the importer should buy. It's on the importer, but since there is a price for these CBAM certificates, and the price of these CBAM certificates is related to the price of the European ETS, and it's linked to the level of embedded emission, this will be something that you have to understand. Also, the compliance cycle for the importer will be a little bit challenging because it's very limited, let's say, the hedging strategy that can be built by the importer, because importers should buy a defined amount of CBAM certificates every quarter. They don't have the possibility, they have a very limited possibility to sell this certificate. Actually, in the regulation, we know that there is only the chance of a repurchase request to the national competent authority. So the coverage and eventually the hedging strategy of the importer is very, very limited. And this can also create somehow some changes in the relationship with some exporters, because maybe the importer will decide also when to import some good, postponing or anticipating, considering the overall cost of the CBAM. As you can see here, we have an example of the declaration that the importer is doing quarterly, and there is a lot of information. So there are total goods, total emission, the total of goods emission, the goods emissions per unit, the goods indirect emission, the goods direct emission, plus supporting documents related to your installation, because we need to make sure, and starting from 2026, the data will be also verified, that the reported data is correct and that the importer is paying the fair price for the embedded emission inside the goods they are importing. So I will like now to deep dive a little bit more about the concept of embedded emissions. I will leave the floor to Vivek.
Thanks, Pietro. Thanks for a wonderful, insightful session on the context of CBAM as such. Just allow me a second to send the deck. Hope you can see this now.
Yes.
Wonderful. So as we have seen so far, Pietro setting the context of where CBAM is coming from and the very interrelation between CBAM and EU ETS. The context is set that every exporter which is landing their products within the EU custom boundary need to really be providing at the stage of custom entrance itself what's the sort of embodied emission which is there in the product which is landing within the EU boundary as such. So before deep diving into anything on the embodied emission, I would like to just put a little clarification around. We have heard multiple different type of carbon footprints, just to understand where exactly, in what subset exactly the embodied emissions are sitting into. So as we've seen that, and we must have already learned about it, that within carbon footprint, the very first thing that we've been hearing about is about corporate carbon footprint, which is done as per GHG protocol, and there is an ISO standard, ISO 14064, which talks about pretty much what the business activities are all about, right? Covering your scope 1 of any sort of a direct emission that's happening within the business boundaries, scope 2, which is all about your energy purchases, and scope 3 is everything which is in the value chain, it's in your supply chain as such. The boundary limit, one key point to consider when we are talking about corporate carbon footprint, it's the business boundaries that you need to consider and find out what exactly is the emission under various different sort of facets of the business as such. Taking a little step below that, so the company and the business must be into either either the production of any product as such or into services. If we are talking about production of product as such, then again, there are a couple of approaches and how can you look at from the carbon footprint angle as such. That starts with a product carbon footprint. Now, product carbon footprint can have two different connotations. One is while you look at the overall environmental impact of the product, and that would be categorized as a life cycle assessment. As the name suggests, it talks about the whole life cycle of the product, the time when the product's raw material being extracted until the time the product is produced, shipped, retailed, consumed by the end consumer and disposed of. And then you talk about the waste, how the waste is being treated after the product is disposed of. So that's about the life cycle, and that's where you look into the aspect of life cycle assessment. But if you look at in the life cycle assessment, what you are really evaluating, it's not just about carbon emissions, but you're looking at overall environmental impact of that product being produced and being consumed as such. So which would look into various different parameters in terms of soil toxicity. There are multiple parameters on which you need to evaluate your product and find out the impact. When it comes to product carbon footprint, it again gets, the boundary limits gets limited, right? Now you're only looking at not any other impact on the environment, but purely on greenhouse gas. So that's the perspective that you need to have when you look at product, either a life cycle or a very specific sort of a product carbon footprint. Step below that is, again, further, if you are narrowing down the boundary limits, is where the embodied emission comes in picture. And we will look more into that detail. But if you look at the hierarchy, that's how it starts with, you look at the corporate carbon footprint, then you look at specifically with respect to your product. And then in that, there are possibilities of either going life cycle or looking at very specifically product-based carbon emission. That's precisely what I'm just trying to put through this slide. Is that you can see at the top, the chevrons mentioning starting from upstream process until the end of the life. That's how you define a life cycle, right? That starts with basically mining of the raw materials in the first place, and then eventually looking at the raw materials being transported. All of that is part of the upstream process. Then comes your the development or production of the raw materials or the ingredients which are going into the product. So effectively speaking, that grain is being grown in the farm. However, for making biscuits out of it, you need to basically prepare a flour out of it, right? So that's the flour in this case for biscuits would be taken as a precursor. I've taken just a very simple example out here just to understand precursors. This is primarily coming from the medical industry, that whole terminology of that you have a very specific ingredients going into a chemical production. But before that, you need to prepare certain solutes and solvents. Those solutes and solvents, which are sort of an intermediate stage, go into actually the processing and manufacturing of that specific chemical called as precursor. So again, here coming back to this case, is from those raw materials, you prepare precursors. Moving on from there, you go to the process of actual production, right? Where you are really transforming the product, those precursors, into the finished final product. Then it definitely, as we understand, it would leave the plant to go for the use of the end user, and eventually after the end user uses it, it goes for the disposal, and that's how the whole life cycle is. Now, if you look at the big rectangle in between, this is exactly depicting how a life cycle assessment gets carried out, where you cover everything from upstream process until the end of life, irrespective which product you're talking about. You would look into every element of the life cycle as such. But if you look at the dotted sort of a square in between, that talks about exactly where the EU CBAM is expecting the exporter to look into very, very specifically. And the reason is very clear, as we have learned from Pietro earlier, that whatever today in CBAM is happening, it is eventually being replacing the EU ETS mechanism. So EU ETS had been calculating and issuing those allowances based on a specific set of emissions, and those specific set of emissions are basically defined by that boundary limit, that what emissions are pertinent, and that's what it's basically a super subset, I would put it, of the life cycle assessment, where you define the boundary limits. Only precursors which are pertinent for a complex product, and we will learn more about complex product and simple product a little later, but only in those cases, the CBAM requires you to consider all the precursors which are going into the production process, and whatever the finished product which is coming out of the production process will be qualified as if it is a CBAM product, then you have to provide all the embedded emission which has gone into precursors and during the production process. Now, that includes two sort of emissions, of course, direct and indirect. Direct is, of course, as we understand that, whatever is actually going into process, if any heat is being consumed in the process, or if any effluent which is coming up with some amount of greenhouse gases going into the environment, all of those emissions are all sort of direct emissions. Indirect emissions, as we understand that, if any electricity consumption is happening, let's say you have an electric arc furnace and you're consuming electricity, all that emission which is coming from the generation of that electricity would be falling under the category of indirect emission. So that's how you set the boundary limits, and that's where what the CBAM requires you to provide. So what I'm just trying to convey out here is that anything, if you are going to do and put your LCA numbers in place of your embodied emission, effectively you are overstating your emissions, because as you can see that LCA covers a much larger span, and hence the impact in form of greenhouse gases also would be higher. However, the CBAM requires you to look into very, very specifically within the process, in that process flow chain, where exactly the emissions are coming from, whether it's from raw material or from processing or from electricity consumption. So that's how you conclude it. As you can see that there are other colored boxes on the right side, which also talks about that every element that gets covered in LCA, which actually is completely sort of avoided in case of embodied emission. You're not looking at waste, energy consumption, or other toxicity and other related factors, but very specifically everything boiling down in form of GHG emission. So that's basically the sort of a background in terms of what embodied emission and where exactly it is coming from. Now, when we look into it, that how and what do you need to provide is very specifically the complete mass balance, right? If you are producing good X, and within that good X, you are consuming Y and Z as a raw material or precursor, you need to provide that complete mass balance of it. Look into the complete energy flows. If there is a steam being injected into the process, or you need a steam for heating purposes, again, that complete inflow of a steam or condensed stream of water which is going out, you need to really see the complete energy flow and energy balance, so that you can ascertain that in the process, what is the amount of energy that has been consumed. Any other fuel that has been consumed in the process itself, that needs to be accounted for, so that you can identify very clearly what is the amount of embodied emission that has come into during the process. Beyond that, there are some element of upstream processes, the production of precursor good, that needs to be considered. Of course, not about the mining, but of course, after that, whatever you are doing after the mining, creating that precursor itself, developing that precursor itself, that is the process. That is one thing that you need to consider. I'll give you a very simple example here. For any aluminium, or let's say you are a producer of a steel rods, right? And for steel rods, definitely there'll be an amount of iron ore as a very, very core raw material that you need. Iron ore, basically you do mining, and after the mining, you come out with hematites and magnetites and various different ores. You bring those ores, and the very first step, which is called the precursor manufacturing of pig iron, is happening, right? For steel rods to make, you need molten steel. For molten steel to get produced, you need pig iron there in the first place. So pig iron, for this particular producer who is selling steel rods into EU market, need to consider pig iron's production, and this is one such precursor. For the production of that precursor, you need to consider whatever emission is being embodied in pig iron also into your calculations while you are calculating your complete embodied emission. So in this process, right, while you get the iron ore, the very first step is, of course, about the smelting, where you add other additives like as coke for the heating purposes, and you add limestone again for other properties like removal of impurities and all of that. So while in the smelting process, you are adding a raw material as iron ore, the other ingredients which are going, which would again forming part of the whole operational process. So you need to consider embodied emissions around those inputs as well. While you do the mass balance, you will definitely be adding that element. Once the pig iron gets ready, is of course is the process where you go for the blast furnaces, right? Where the whole process of refining is happening and you are generating sort of molten steel out of it. So that process again would be a precursor to your steel rods, because there is molten steel is one element which is going into the final manufacturing of the rods. In that process itself, whatever the energy consumption or fuel consumption that's happening, whether in form of electricity through an electric arc furnace or probably a BOF, a blast furnace as well, in that scenario, whatever fuel consumption is happening needs to be considered. So that's how what exactly CBAM requirement is for you to look very specifically in a batch of a particular product's production, that at what stages you have considered a raw material which is already carbonaceous, and in that process of converting that into a final finished product, what amount of energy, heat, electricity that you've consumed, and what amount of greenhouse gases that have got emitted into the process. As very, very pertinent in case of aluminum production, if I'm talking about, again, there is another effluent which comes out beyond greenhouse, like within greenhouse gases for sure, but beyond carbon, which is perfluorocarbons. So that needs to be considered in part of your overall embodied emission calculation. That's the approach that's what basically CBAM, or rather the EU CBAM regulation, actually is suggesting us to follow. Now, if we look at CBAM goods, while Pietro mentioned about the sectors, the products which are falling under the CBAM category, why only these products? Of course, the reason is very clear. EU ETS, pretty much more than 50% of the emission is getting contributed from products like cement, fertilizers, iron, steel, aluminum, hydrogen, and electricity. And that's the reason the very first phases, right? In the initial phase itself, and even later at the definitive stage, any company which is selling products around these into the EU market need to be coming up with their very specific disclosure around the embodied emission. So although Pietro has covered it to a certain extent, but reporting metrics, as we understand that, you have to provide the tons of goods that you are supplying in case of electricity, of course, kWh, MWH unit needs to be provided. The greenhouse gases coverage, as you can see, that pretty much only around carbon dioxide that we are talking about, but in specific cases, you are required to provide, like as in the case of fertilizer, you need to provide the NOx, basically the nitrous oxide as well, right? In case of aluminum, you need to provide perfluorocarbons additionally on top of carbon dioxide as well. The emission coverage during the transition phase, the phase until the January 2026, is all direct and indirect need to be accounted for. While in the definitive phase, it's only direct emission which is going to come in case of iron, steel, aluminum, and hydrogen. However, cement and fertilizer need to provide both direct and indirect emissions. The direct embedded emissions, of course, you need to be calculating everything based on either mass balance, energy balance, or looking at very, very definitively all flow of streams of raw material / precursors, and during the process, what sort of energy consumption that's happening that you need to be looking at. So this is the approach that's been suggested. Now, in terms of basically embedded emission, when it comes to electricity, you need to be looking at the grid factors which are provided, or otherwise you can look at the default values. Default values are during this transition phase, EU has come up with a very clear picture in terms of all CBM goods and their precursors, very specific emission based on per ton of good, right? So tons of CO2 per ton of good of all type of products. These are again EU-based numbers, and that's why they are only called as default values for the moment, while we are really gearing up and providing all the actual embodied emission. EU is still allowing us to start in the transition phase using these default values itself, but start putting together numbers very clearly. I am selling 100 tons of steel rods into EU. Every ton of my rod would be X amount of embodied emission, which might be borrowed currently from default values, but eventually you need to come up with very specific embodied emission coming into in your installation as such. Now going into very sort of a specific stuff around the specific embodied emission, right? When we are talking about any good G, there are two factors which are going very, very simply. the attributed emission of the good itself, which is basically in the process, whatever type of embodied emission that is getting into the product, plus any sort of input material, which is everything to do with your precursors. You might be having 10 different precursors from various different streams coming in. You need to all add them up and look at your complete production, which is your activity level, AL value. You divide by that and you get your embodied emission. When it comes to anything to do with precursors, embodied emission, you need to look at all sort of precursors, and based on mass balance, what amount that is going, that of that precursor that is going into the final production, and specific embedded emission of that particular precursor, you need to be calculating that. Now look at it, this can go in a chain of conversation if you have got, or a chain of calculation, right? If you've got a like is in the case that we discussed earlier, that molten steel is coming from the fact that it is coming from pig iron. Pig iron is coming from you taking iron ore and adding coke and basically lime, all of that. So think of it that you have to go back to the stage where you are covering all your precursors together, and that's why it is being provided in a summation format here, that you need to add up specific emissions, and again specific emission for that precursor you need to be calculating a level below that, what all raw materials that's going into it. So that's the approach that you take. The simple and the complex good, the formula, as you can see that in the next slide as well, it's pretty much the same. Formula is nothing, it is just telling you that how you need to attribute all the emissions from precursors to the production operation process that you need to add up based on the total production that's happening. Between simple and complex good, as the name suggests, complex good is something which has got raw material or precursors which are, they themselves are CBAM goods. So say in very specific case that we were talking about, right? If aluminium or steel is a CBAM good, and this is getting generated from pig iron, the pig iron also is a CBAM good, hence steel becomes sort of a complex good in that case. When it comes to complex good, the guidance is very clear. You need to consider every precursor which is going into creating that complex good. When it comes to other complex good, you can think about it also from the value chain perspective, right? It becomes the complex goods are where you are sourcing different raw materials from various different locations, and then you have to consider all the upstream and the process part of emissions part of it, and makes it a little complex. So from that perspective, it's being termed as complex good. Simple good is something which is having a raw material which is non-CBAM at the moment. So it is again very dynamic, as we understand that, though EU has come up with very specific guidance today with very specific products under CBAM, but the directionally they have already made it clear that more and more goods would fall into the category of CBAM depending on how the emission profiles evolve, right, within EU. So they may increase the impact to larger goods. So a simple good today may not remain a simple good tomorrow, right? Depending on the precursor getting into CBAM, and then hence it would be classified as a complex good there. The attribution of emission is, of course, as we can understand that from the same production line, you might be making probably two different type of products, right? So the system boundary limit, right? That is the process flow need to be identified very clearly. And in terms of based on the mass balance, if you're getting two different products coming out of it, then what portion of emission should be attributed? And that can be done based on the mass proportion itself, the throughput proportion itself. So that's how basically you do this whole calculation around attributing the emission. Complex good, anyway, I've covered a little bit of that already. When it comes to reporting your numbers, during definitely the transition phase, there is some amount of relaxation where you can basically look at default values until the 30th of June, basically for this year. So starting July compliance, July 2024 embodied emission disclosures that were required to be having 80% of embodied emission, and the 20% embodied emissions can be referred or basically calculated based on default values. This would be shifting all to actual embodied emission calculation effective Jan 2026. So yes, from now until whatever, right, from July until 6 more quarters from July is where you can still rely to an extent on the default values, but beyond that, of course, everything need to be based on the embodied emission calculation as such. Now, how do you calculate it? I have anyway mentioned about considering all the process-related emissions, the electricity consumption in different processes, what sort of heat consumption or energy consumption is happening, all of that need to be accounted for while you calculate it. This is the way of activity basis calculation, right? The preferred method, of course, when there are two methods by which you can always report your number, because that's also need to be reported, right? By which method have you actually gone ahead and reporting your embodied emission? So the other method, of course, is about monitoring, right? Where you have a batch monitor, right? You are consuming gas into your plant to run your to fire your boiler. Then there is a gas meter, and you need to be basically then batch by batch, you need to identify that what amount of gas consumption that has happened, and accordingly you are calculating your carbon emission based on the net calorific value of the gas that you're consuming. Again, there are certain requirements on the calorific value test as such. So basically there are certain frequencies by which you need to be recalibrating your monitors, like the meters that you're put in, or basically getting done a gas chromatography altogether, so that to know exactly what sort of composition is going. So you know very clearly the mole percentages of various components within the natural gas as such, to identify exactly what sort of net calorific value it has. So the requirement from the compliance side is pretty straightforward, but at the same time it's pretty exhaustive, right? One needs to be very, very sure where the numbers are coming from, what you're borrowing. You simply can't use LCA numbers, as we've seen. Like if you're looking at for any LCI based databases and looking those emission factors to calculate your embodied emissions, you're going to definitely overstate your embodied emission, which would anyways have like couple of repercussions for sure, right? You need to revise your numbers, or you need to pay, or probably your importer needs to surrender more CBAM certificates in that case, because the embodied emission is high. So that's precisely how EU has been basically talking about this. I will give it back to Pietro to take it forward, this conversation.
Thank you very much. Let me share my screen again. So final part of this webinar, Vivek, I think that you were amazingly great explaining the embedded emissions. So I'm going to be very, very, very short. What's happening now? I mean, from the importer side, probably, and you notice it already, they're engaging with suppliers because they need data. And this is something which is from a certain point of view easy, and from another point of view a little bit challenging. So focusing more on the supplier side, you should understand if you are exporting to Europe, if your goods are included in the CBAM regulation, how eventually these products also are sold to the European Union, because the responsibility on, let's say, the value chain for the importers is very, very, very important. You really need to define a monitoring methodology to follow and to measure all the parameters that Vivek was saying. So direct and indirect emission, understanding your precursors, understanding the boundaries of your installation, and of course also the requirements about the reporting period. Furthermore, you have to always keep in mind that for your importers, if you paid a carbon tax or something related to an ETS on a national market, this will be very relevant starting from 2026. Actually, also in the transitional phase, importers should assess on the carbon price paid in the country of origin, but it is not relevant since there is no financial adjustment. What you have to do is to get ready, keeping in mind that the verification of the data will be needed starting from 2026. There is not a clear framework for verification. We have the general rules of verification, but it's not clear yet who will be in charge of this verification process. All the information can be gathered in a template file created by the European Commission, and it's the template file to calculate the embedded emission, putting all the inputs that are needed. The use of this template actually is voluntary, but probably your importer should ask you to use this template, because in this moment where there are some gaps, with the data, if the importers can show that they were trying to collect this information, probably they will not get a fine eventually if the national competent authority will go inside the provided information. The template file, it's available. We can send it to you after the webinar. We can also organize a deep dive on the calculation of embedded emission, presenting, of course, what we do, how we do it, and what is the solution that we can provide to the exporters. And if you want to know more about the CBAM world, for sure, you can also start reading the guidance documents prepared by European Commission. There is the English version, the Arab version, the Chinese version. There is specific and detailed, let's say, frameworks for all the goods belonging to the same sector, as Vivek was explaining. So tons of things to learn. It's a complicated framework. It's going to be something that you will face, not just for the European clients, but also in the next year for other clients. So you really have to start understanding the embedded emission of your goods. It's not an easy job, also if you are an installation, but if you don't control all the process related to this good, this will be even more challenging because we have to go back to your supply chain. So now we have the Q&A session, Neha, and we are like 1 hour sharp. So I will stop my screen sharing and we can deep dive in some of the questions maybe from the audience.
Thank you, Pietro and Vivek, for the valuable insight shared today. We now open the floor for the Q&A session. Please drop your queries in the Q&A section and we will address as many as possible.
Okay, so if you don't mind, I will go with the first one. What do you think?
Yes, Pietro, please.
So I'm going to read the question. Thanks for placing this question. Is CBAM overcomplicated? And is there a mechanism in place to prevent fraud and purchasing of certificates? Tricky question, not really sure if I understand it, but it is complicated, but it's workable, let's say. I mean, from our experience, all the exporters are engaging, of course, with someone who can help them out with the calculation of the embedded emission. And as I said before, it's a process. You really need to understand everything is happening inside your installation and eventually outside of your installation. If there are some relevant precursors, it's a challenge, but there are several solutions that we are actually working with a lot of exporters to collect the data. In general, the fraud prevention for CBAM, it's related, of course, to the declaration, which is done by the importer. And there should not be a misalignment between what they are importing and what they are declaring from the CBAM point of view. Of course, a big change also in the CN code to skip the CBAM regulation. It's something that it will be noticed in Europe. And so, yes, there are in place internally, so for the European importers, some mechanism to prevent frauds in order to not, I mean, if the scope of the fraud is to prevent the purchase of CBAM certificates, there are some elements that are already in the regulation and that are applying, of course, for the importers. All the compliance is on the importer, all the fines eventually, because in the CBAM has all the MRV mechanism where there is a monitoring, a reporting, and a verification need. There is also a fine mechanism, but it's for the importer.
Thanks a lot, Pietro. So we have another question. What is bubble approach and how does it work?
Sure, yeah, I can take that up. So as the name suggests, right, bubble approach is where you're trying to sort of create an overarching system there. So basically, a bubble approach is all about while you are producing X CBAM good, and you have a requirement of a precursor, which is again a CBAM good, as we were seeing in the earlier cases, right? In case of aluminum and steel and other products as such. The CBAM guidance is such that instead of defining very clear differentiated boundaries for the end product and the precursor, since if the whole precursor, whatever is being produced in that plant, has been completely consumed within the plant itself, within the same installation, meaning to say you're not selling precursor anywhere else, but you're consuming for your internal production itself, the whole process can be staged in one. So as we were talking earlier, that the production of precursor like pig iron, from pig iron to you are making molten steel eventually, and all those processes, if all of this is happening in a batch process where every precursor, 100% of it is getting consumed in the same plant to make the final product, you can make one common system boundary, or sort of create one big balloon under which you can put together all your process. And that's how you can basically provide the complete embedded emission. So that's the approach that's basically it's been taught.
Thank you, Vivek. Thanks for explaining it so nicely. We have another question. Is there a criteria on the size of company on which the CBAM is applied to?
If I can jump in, it's not about the size of the company. The objective element is the goods exported, or from the importer's point of view, imported inside the European Union. So it's really the import, let's say the CN code, that of course can be compared with other codes of trades. And so it's not about the size of company.
Yeah. Yep. And further to add, sorry, Pietro, you were saying something? Continue.
No, go ahead.
Yeah. So further to that is that, I mean, it is not about the size, it is about the import of good. If anything worth more than Euro 150 and it's a CBAM good, you need to do a disclosure of your embedded emission. So yes, as Pietro mentioned, whether you are a small exporter or a very big time exporter, as long as the good that's been exported falls under the CBAM, under a specific CN code, you need to disclose the embedded emissions.
Yeah, and as you mentioned, the exemption are very limited because the value exemption is set to a very low threshold, and other exemptions are just for, let's say, goods that are not going to be sold in the European Union, so they are just transiting the European Union.
Thank you, Vivek and Pietro. If you have any other question, please drop in the Q&A section. We are already up on time. I'm just waiting for, I will wait for 2 more minutes, and if we do not have any further question, we can wrap this up.
Okay, anyhow, they can send us questions by email and we can suggest approach to find the best solution, because of course then we need to understand a little bit better about the processes and their value chain and the supply chain. In the future, all the data also of the exported goods will be collected in the CBAM registry to make it work in a smooth way. And the reporting period is crucial because the importer has a specific reporting period, and the data that should be collected about embedded emissions, it's related to that specific good exported to the European Union. So taking Neha, if you agree, one question that I was reading and now that I missed totally on the screen, it was about different reporting cycle and all the data sets and CBAM requirements. If I got the answer correctly, of course, one of the elements I was showing also you in one of the last slides is the reporting period. So the reporting period should be aligned to the reporting period of the CBAM declarants. And as I said now, it's about the embedded emission of this specific bar of steel that we are exporting. So we are not allowed to use old data. Inside the regulation and also in the guidance documents, and together with your consultants, of course, you can understand exactly how eventually to use all data, but it's about a monitoring. It's really about monitoring. It's really about eventually a mass balance approach of that specific production. So what you need, it's not just to try to find a quick solution. You really need to assess on your own process, your own supply chain and precursors, and understanding how you can share this information with your importers.
So I guess, yeah, Pietro, that's precisely, I guess, when we talk about various different reporting cycles, the CBAM requirement is very, very clear, right? There is a quarterly reporting that the importing entity needs to do, and they would need corresponding data for that particular batch of good that the importer has received. When it was produced, what sort of emission was associated. Now, whether there are multiple precursors or different staging cycles in between, you might be buying a product and might be staging it or probably pre-preparing it to make the final precursor, which you might be selling it to the exporter, which eventually being manufactured and sent to the importer. You need to be really matching this, right? Otherwise, you would be falsely putting certain emissions out there. So one needs to be clearly aligning with whatever batch of good that you are sending in completely matches with the set of goods and precursor which has gone into the production of that particular good. So that's how the expectation is very clear. And yeah, it boils down to the fact that we need to really do the proper mass balance and come out with those numbers.
Thanks a lot, Vivek and Pietro, for explaining this. We have another question. How does DEWA D33 initiate help exporters achieve CBAM?
So I think that the DEWA D33 initiative is related to renewable energy production and probably photovoltaic, if I'm not wrong. So it's as Vivek was explaining much better than I could do. It affects, I mean, to have an energy consumption of renewable energy, this changed totally the calculation, of course, of indirect emissions, scope 2 emissions eventually in the JEC protocol points of view, because you have no carbon emissions if you are consuming renewable energy. And this is exactly the concept of the decarbonization, let's say, that I mentioned at the very beginning. So you have your actual level of embedded emissions, and to be competitive in the market, you should really understand how to decarbonize. And of course, for scope 2 emission and direct emissions, the purchase of renewable energy is something which makes a lot of sense.
Yeah. I guess, Pietro, you rightly mentioned, and I guess this is precisely what DEWA initiative is all about, to initiate this distributed solar power generation that would entail that the industries here would be able to receive not just from the grid, but from a sort of a mini grid for the solar power-based generation consumption as such. So that eventually is going to definitely cut down the embodied emission, which is going to come from the indirect electricity consumption as such. So as Pietro rightly mentioned, that eventually it would only help in you having lesser embodied emission, which eventually would help your importer be in a position to surrender lesser CBAM certificates because the emissions are lower. So yes, in way, it is going to make, I would say that not just compliant, because compliant, of course, is more related to how you are calculating your embodied emission and all that, but more competitive from a perspective that now you are a better or a little greener product as such.
Yeah. And the compliance is still on the importer. So
yes. That's the mother of all problems. Yeah.
Thanks a lot, Pietro and Vivek, for explaining all the questions so nicely. We are thrilled to see such an engaged and enthusiastic audience today. While we would love to answer all the questions, we are mindful of the time and we really need to wrap up here. But the good news is we'll be conducting a dedicated follow-up Q&A session in the coming days, and you will receive an email with the details shortly. In the meantime, please feel free to email us your questions. And as promised, we will share the ebook on CBAM and today's presentation deck with you very shortly. Thank you again for joining us today, and we look forward to seeing you at our next webinar. Thank you, everyone. Have a wonderful day ahead.
Thank you, everyone. Thanks, Pietro. Yeah, bye-bye. Take care. Ciao.
Ciao. Ciao.